first here, Bank of Russia opposes private stablecoins in the country. In a recent development in the ongoing conflict between the Central Bank of Russia, or CBR, and the Ministry of Finance, representatives of the former have spoken out against the latter's idea of supporting stablecoins, which some private investors have sought to launch in the country. Local media reports that a representative of the central bank dismissed recent talk of Russia-based stablecoins. This talk was started last week by the Ministry of Finance's Director of the Financial Policy Department, Ivan Shebeskov. At the time, Shebeskov spoke in favor of creating stablecoins linked to assets such as the ruble, gold, oil, or grain. He called it the right path for developing new technology and encouraged private companies to adopt this financial tool if they deem it necessary. The CBR speaker noted that private stablecoins tend to be associated with higher risks as the pool of underlying assets does not belong to the issuer. They also flagged that there is no guarantee of redemption at par by the issuer, and as such, the price of the stablecoin is not always stable. In light of the traditional CBR message, the bank's representative noted that the ruble remains the only legal payment method in the country. They went on to state their belief in the digital ruble, asserting that it combines the advantages of digital payments with the reliability of national currency. As local industry experts sometimes emphasize, the central bank digital currency project is of great importance to the CBR's suspicion of private cryptocurrencies. On June 29th, Kirill Pronin of the CBR's Department of Financial Technology stated that crypto mining could be legalized under specific conditions, namely that all mined assets are exported to foreign exchanges. The Ministry of Finance's Ivan Shebeskov disagreed, citing Russian miners' current challenges in selling their crypto abroad due to geopolitical reasons. So yeah, I'm sure that would affect them because a lot of people have banned their relationship with Russia. So we'll see how that goes. Up next here, U.S. Treasury calls for public comment on digital asset policy following Biden's executive order. The United States Department of the Treasury is soliciting public feedback on the potential advantages and disadvantages of digital assets in connection with President Joe Biden's executive order from March. The Treasury Department has announced that it is seeking input from the public on digital assets and their implications for financial markets and payment infrastructures. This is part of the Biden administration's executive orders aimed at mitigating risks around cryptocurrencies. The Treasury Department is committed to understanding the implications of digital assets and seeking input from the public to inform our approach. Undersecretary Nellie Liang noted that digital assets present both potential benefits like faster payments and risks such as fraud and scams. They want to ensure that any policy decisions take into account the views of those who will be most affected. In the request for comment published in the Federal Register on July 8th, Treasury noted that a lack of financial education on digital assets could leave vulnerable communities at a disadvantage when implementing any related policy. The increased use of digital assets may pose financial risks to those who are less informed about the market or who may be more vulnerable to economic inequality. It is important to make sure that digital assets do not cause undue harm to consumers, investors, or businesses, and to put in place protections for those who may be at greater risk. By expanding access to safe and affordable financial services, we can help to protect vulnerable populations from economic hardship. The Department of the Treasury has requested that the public submit comments by August 8th on the potential implications of wide-scale adoption of cryptocurrency, both for individual investors and businesses. In addition, the Treasury has asked for feedback on possible risks associated with digital assets, including losing private keys and the authenticity of NFTs. On July 7th, Treasury delivered a framework to President Biden on crypto for U.S. government agencies to work with their foreign counterparts by executive order. Liang has previously called on Congress to pass legislation around stablecoins and work to promote financial literacy of digital assets among people who have limited access to mainstream financial services. So that's pretty cool. I'm curious to see what type of feedback that they get, whether positive or negative. So we'll keep you guys updated on that. Up next here, SEC extends window to decide on ARK21 shares spot Bitcoin ETF to August. The United States Securities and Exchange Commission has announced that the deadline for approving or disapproving ARK21 shares Bitcoin exchange traded fund has been pushed back to August 30th. According to a filing from the SEC on Tuesday, the deadline for approving or disapproving the ARK21 shares spot Bitcoin ETF again has been extended from July 16th to August 30th. The application, which was originally filed with the SEC in May and published for comment in the Federal Register on June 1st, included a proposed rule change from the Chicago Board Options Exchange, BZX Exchange. 21 Shares partnered with ARK Invest to file for a Bitcoin ETF to be listed on the CBOE BZX Exchange in 2021. However, the SEC rejected the application in April. According to current rules, the SEC can delay its decision and open the investment offering to public comment for up to 180 days. This suggests that the SEC could provide a final answer on the matter by January 2023. SEC Assistant Secretary J. Matthew Delis Dernier announced an extension to the proposed rule exchange for a longer period, stating that it was necessary to allow for sufficient time to consider the proposed rule change and the issues raised therein. The SEC has never approved an ETF with direct exposure to crypto, but gave the green light to investment vehicles linked to BTC futures, including funds from Valkyrie and ProShares. In June, Grayscale filed a petition for courts to review the SEC's decision to deny its application to convert its Grayscale Bitcoin Trust into a spot BTC ETF. Grayscale senior legal strategist Donald Verrilli alleged in the filing that the SEC had acted arbitrarily and capriciously by failing to apply consistent treatment to similar investment vehicles. I know that's been an issue over multiple platforms, so it's not anything new. Up next here, Multicoin Capital raises $430 million for new crypto startup fund. Multicoin Capital, a prominent crypto investor, has launched a new venture fund valued at $430 million. This demonstrates venture capital's growing interest in the blockchain economy amid the bear market. Multicoin's Venture Fund 3 will invest between $500,000 and $25 million in early-stage companies across various crypto and blockchain-focused industries. The company announced this on Tuesday. The fund is also willing to invest values of up to $100 million or greater for later-stage projects with an established brand and market presence. Venture Fund 3 will place greater emphasis on crypto projects that have demonstrated a commitment to physical work or protocols that have created economic incentives for permissionless contribution. Multicoin wrote that while most innovation in cryptocurrency has been focused on coordinating digital communities and economies, tokens also create opportunities for innovation and capital formation and human coordination that extend beyond the digital world and into the physical. The company also emphasized the benefits of decentralized autonomous organizations, or DAOs, for data governance. Up next here, French central bank head announces phase 2 of Wholesale digital euro project. The first phase of Wholesale digital euro experiments has been completed, and phase 2 experiments will commence this year. Banque de France Governor Francois Villeroy de Galhau said Tuesday. He added that 4 or 5 additional experiments are expected to be launched. In his speech at the Paris Europlace International Finance Forum, the French central banker highlighted the European Union's accomplishments in regulating crypto assets under the French presidency, specifically mentioning the Transfer Fund Regulation Travel Rule and Markets in Crypto Assets, or MICA. The Eurosystem is investigating the feasibility and design of a digital euro, which would function as a central bank digital currency. The primary motivation for developing a retail digital euro is to ensure that central bank money remains relevant and useful in the economy, even as private digital currencies gain popularity. Villeroy de Galhau spoke in favor of using intermediaries such as banks to handle customer relations and know your customer or anti-money laundering measures, rather than having the central bank manage these directly. Villeroy stated that he believes the euro system should not manage digital euro holdings. He went on to say that the Banque de France closed its last private customer accounts over 20 years ago and has no intention of reopening any. A wholesale CBDC will play an equally important role as a retail CBDC in interbank transfers and similar transactions, Villeroy de Galhau said. He went on to cite critical use cases for the settlement of securities issued with digital ledger technology, or DLT, and cross-border and cross-currency payments. The Banque de France has designed a proprietary digital ledger technology called DL3S for a potential future system. In addition, they have produced an automated market maker platform based on a decentralized finance model where settlements of multiple CBDCs could be carried out. New experiments will involve testing a prototype digital euro with private actors and other central banks in preparation for the 2023 implementation of the pilot regime. Villeroy de Galhau stressed the importance of interoperability between DLT and the traditional system. DLT will complement rather than replace traditional infrastructure, he said. So that's pretty interesting. There's a lot of new stuff coming in this space for sure. And last but not least here, Animako Brands raises $75 million to advance open Metaverse concept. Blockchain gaming and venture studio Animako Brands has raised additional funds in a strategic funding round, providing the company with additional resources to expand its acquisition targets in the Metaverse sector. The company announced that it has closed a $75.32 million funding round backed by Liberty City Ventures, Kingsway Capital, Alpha Wave Ventures, 19T, SG Spring Limited Partnership Fund, and others. This raise represents the second tranche of funding following a $358.8 million raise in January that was supported by venture giants Sequoia, China, Winklevoss Capital, Parify Capital, and 10T Holdings. Animako stated that the new capital will be used to fund strategic acquisitions and product development with the goal of advancing the so-called open Metaverse concept. The company went on to say that it plans to continue leveraging blockchain technology to promote digital property rights, including the use of non-fungible tokens, decentralized finance, and GameFi. Despite the current bear market in digital assets, Animako has been actively expanding its portfolio in 2022. In April, the venture studio acquired a large stake in Australian digital marketing firm B Media to expand partnerships with the local blockchain industry. The same month, Animako also purchased video game publishers Eden Games and Darewise Entertainment. Animako subsidiary The Sandbox has been a driving force in the development of the still emerging metaverse industry. As per report, American lifestyle and entertainment brand Playboy recently announced the launch of a meta mansion within the Sandbox, a virtual mansion that will give users the ability to participate in a wide range of gaming and social events. The Sandbox holds the second largest market capitalization in the metaverse realm, only surpassed by Decentraland at $1.4 billion according to CoinMarketCap. So that's pretty cool. If you're into the metaverse, that's something that you might be interested in. That's all we have for you guys today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.